Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning, it's a weekly expiry, and of course, we could expect some bit of volatility here. But given the fact that the GIFT Nifty is hinting at a start around that 19,900 mark, looks like we are poised to build on yesterday's gains. But of course, over the next 30 minutes, we'll be talking about all the cues for trade, the stocks in focus, including the likes of Indigo, as well as Honasa Consumer, which came out with its earnings, and we'll also be taking up all your stock-related queries with our technical expert on the show. So if you have any queries, of course, send them in to us on our YouTube feed live and we will try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Well, Wall Street, in fact, has clocked a winning session last night. If you look at the Dow, S&P, as well as Nasdaq, they've all clocked in a winning streak ahead of the Thanksgiving holiday. Bond yields, in fact, slumped to a 2-month low, but managed to end in the flat zone. Asian markets kickstart the day on a mixed note despite positive handover from Wall Street. The Nikkei and Kospi both trading in the green. The GIFT Nifty, although it's flat, is hinting at a start around that 19,900 mark. OPEC postpones its meeting, on production cuts to next Thursday. Brent crude, in a knee-jerk reaction, slumped somewhere around 4%, but recovered to around $82 a barrel. Among stocks in focus today, Honasa Consumer's profit nearly doubles while margins expand somewhere around 170 basis points. Meanwhile, CDSL becomes the first depository to register 10 crore demat accounts. Also in focus will be Indigo on the back of the tax demand of over 1,600 crore rupees. Well, on that note, let me bring on board our technical expert for today. Joining me is Milan Vaishnav, founder of Gemstone Equity Research, joining in this morning. Great to have you on the show, Milan. Yesterday we did stage a very smart comeback in the fag end of the session. But if you look at the Nifty Bank Index, of course, there was some commentary coming in from the RBI governor, which played spoil sport, and the Bank Nifty, in fact, at one point slipped below that 43,300 mark, which is being looked upon as a very crucial support zone for the Bank Nifty, right? Going into trade today, would you expect Bank Nifty to remain weak on the charts, or would you expect some bit of rebound to kick in there? And, today being the weekly expiry, what is the kind of level you'll be watching out for on the Nifty? Do you think we'll be building on the gains that we saw in the last hour of trade yesterday?
Well, yes. Well, good morning to you all. There are two ways to look at a Nifty Bank. First of all, the yesterday's low coincided with the 200 DMA, which stands at 43,324. So if we round it off conservatively, then we can fairly say that 43,300 is expected to act as support on a closing basis for Nifty Bank. And if that stands violated, we might see some incremental weakness coming in. On the upper side, it has got multiple resistances in form of a pattern resistance, in form of 50 DMA, in form of 100 DMA, all lie in the zone of 44,000 to 44,300. So right now, we can fairly say that Nifty Bank will remain relatively weaker. But in absolute terms, I mean, there might be some technical rebound a bit here or there, but by and large, it continues to remain in a trading range of 700 odd points, with 43,300 acting as support, whereas 44,300, that 300 point zone acting as a resistance. Moving on to Nifty. We are yet to open, so right now we have closed below 19,850, and 19,850 to 19,900. This 50-point zone continues to remain a small resistance area for Nifty in form of a minor double top. And today is the weekly options expiry for Nifty, and going by the options data as of yesterday's close, 19,850 continues to remain a resistance for the Nifty. So as of now, so long as we are below 19,850, we have to count that level as a resistance. If we are able to move above 19,900, then there is a room for another 100, 150 odd points on the Nifty on the upside. But as I always say, I would prefer staying reactive rather than getting predictive in nature. So long as Nifty is below 19,850 to 19,900, this 50-point zone is resistance for Nifty.
All right, those are the levels then to watch out for on the Nifty as well as Nifty Bank. Of course, it is the weekly options expiry today, so we will be keeping an eye out on the movement that we see on the Nifty index. But let me also bring on board Kranti Bathini, who's the equity strategist at Wealth Mill Securities, joining in this morning. Great to have you on the show, Kranti. Let's talk about the semiconductor theme. This is an emerging theme, and lots of these companies like Vedanta and Tata's, they are eyeing a foray into this space, right? Even L&T, in fact, has announced a foray into chip design very recently. But yesterday, we saw CG Power, the Murugappa Group company, announcing its foray into this particular space. And of course, CG Power surged somewhere around 20%, and Cube Investment, which has a 58% stake in CG Power, also saw a great up move. Now, as I mentioned, the company has plans to foray into the semiconductor space. It has applied for the subsidy, for the same. And if you look at the kind of partnership that it is looking for, the tech partnership, if that fructifies, do you think this could be one of the best plays when it comes to this particular theme, or do you think valuations are already stretched when you look at a CG Power, given the fact that it has surged multi-fold over the last 3 to 4 years? It is already a multi-bagger. So if somebody wants to play this particular theme, the semiconductor theme, would you look at a CG Power vis-a-vis a Vedanta, because Vedanta is still scooting for a tech partner for the same?
Absolutely, Nandita. Nandita, thanks for inviting me on your show. Good morning to all the viewers. Yeah, you're absolutely correct. There was a lot of exuberance in this space with respect to the semiconductor space is concerned and the chip space is concerned. But as you rightly mentioned, CG Power has rallied and it's a multi-bagger for the investors in the past 3-4 years. Right now, the stock with respect to the existing businesses are concerned, it is fully priced in. But given the kind of heightened activity with respect to the power segment business is concerned, the company have much more legs to follow in the coming next few quarters. But with respect to the new foray into the chip making business is concerned, which the company made a disclosure yesterday, and it witnessed a complete surge during the trading day. But Nandita, it is completely premature at this point of time, because the semiconductor business is a complex and highly sophisticated technology, and it have a different supply chain and the production chain is concerned. Now coming to the CG Power and the companies which are you mentioned like Vedanta and L&T, which have high aspirations to get into these kind of business segment, the highly sophisticated chip making industry is concerned. They are primarily into the chip designing segment is concerned at this point of time, but it's a long way to go because of the complexity of the nature of chip making is concerned and the technology is concerned. Right now, the entire industry is concentrated with a few players in the market globally, like Taiwan, Intel, and majority is focused with respect to the 3 global players right now. But the Indian companies' aspiration to get into this chip making is we can conceive we are at a very inception, and we are at a baby steps. There are every long journey starts with a few baby steps only. So we are at the baby steps right now. We need to see how the things are going to evolve over a period of time. It's we are at a preliminary stage right now. The things are in the paper only. Now it has to transform into the action right now, and which has to transform in terms of the cash flows for a period of time. At this point of time, investor, there's no need to get into it. Of course, it's a big news at this point of time, but we need to see how the things are going to evolve over a period of time.
You mentioned, of course, that companies are getting into chip design and not manufacturing, as manufacturing would be a highly capital-intensive space to get into, right? So, in that sense, do you think that it will turn out to be a big opportunity, chip design and not manufacturing? Because, of course, L&T, during its earnings has announced that it is foraying into the same, right? But in absence of any pure play semiconductor player at the current juncture, among the rest of the lot, which stock would you suggest investors look at to play this theme?
Yeah, you are absolutely correct, Nandita. as chip manufacturing is a very highly sophisticated and complex technology, and it's also highly capital intensive. Indians, we are good at designing, okay, and our capabilities and our capex can be suitable for the chip designing is concerned at a preliminary stage. So the companies like L&T can be a suitable candidate for the investors who are looking to have their footprints with respect to their the chip industry is concerned, and also CG Power, which is comes from the Murugappa group, and they come up with the current proposal. But there is no need to hurry, jump and buy these stocks, only considering into the semiconductor industry into concern. Okay, one need to wait and watch how things are evolving, and take steps and accumulate these stocks in a very staggered manner with respect to the semiconductor theme is concerned at this point of time, Nandita.
Right, with respect to Vedanta, of course, it is still looking for a tech partner for, its semiconductor foray, right? But what are your thoughts on this particular stock post the demerger announcement that we saw a few months ago?
Yeah, Nandita, Vedanta is concerned, there are we have some resistance with respect to their corporate governance and also the looming debt on their balance sheet. And the company come up with a statement few months back that they are going to foray into the semiconductor space is concerned. But again, they mentioned that it's not from the Vedanta, it is coming up with a unlisted entity from the group of Vedanta. So these kind of complex issues are there with respect to their corporate governance. So we are not in a hurry to buy Vedanta at this point of time, despite of the announcements that they made with respect to the demergers are concerned. One need to wait and watch how they are going to manage the upcoming debt issues are concerned, and with respect to the foraying into semiconductor space, how exactly they're getting the tech partner with respect to the semiconductor foray, and also whether it's really going to benefit the shareholders of Vedanta or not is the concern for the investors at this point of time. With Vedanta is concerned as a semiconductor play is concerned, Nandita.
All right, that's a cautious view coming in on Vedanta. But let me ask you a last question very quickly. We are running out of time. I want to ask you about the recent IPO wave and particularly Honasa Consumer. Of course, there were concerns around its valuations when, the IPO had come out. But ever since it got the, vote of endorsement from the likes of Jefferies, the stock has seen a good run. And yesterday it came out with its second quarter numbers as well. Numbers are pretty decent. The profits, of course, have nearly doubled on a YY basis on the back of low base. But do you think now the valuations are justified, especially since it has not really been able to crack that brand loyalty, that these brands really, capitalize on?
Nandita, a couple of days back, I went to a store and checking their product in the counters, and I am asking how their products are doing. As a disclosure, we don't own any of this stuff, but just the keen interest of their products. When India is in the league of the disposable incomes are going up at this point of time, and it's a very young nation, and people are more interested in these kind of products, even though despite of the valuations look stretched. In the coming few quarters, we need to keenly observe how the sales are going to be sustained and how the revenues are going to be sustained. But it's a stock to be on the investors' watch list, and one can add at dips whenever there is a dip in the market. Investors with a long-term horizon, with a high risk appetite, one can add these kind of stocks in their portfolio, because these products looks promising over a period of time, and India as a young nation, there will be always space for these kind of products at this point of time, Nandita. And there is no need to hurry, buy and go and jump and buy these stocks. One need to track keenly the sales numbers and the cash flows, how they are going to. The valuations looks stretched at this point of time, but these are not the stocks to ignore from the investors' radar.
All right, that's the view. One should not hurry or jump into this stock, but of course, watch out for how things pan out. With that, Kranti, thanks a lot for taking out time and joining in this morning. It was a pleasure chatting with you. But with that, let's go back to Milan, who's been waiting very patiently. Hi, Milan. CDSL is one stock that's in focus, given the fact that, of course, it is the first depository that has managed to register 10 crore demat accounts. Of course, we also have queries coming in on this particular stock. Debu K wants to know your thoughts. On the charts now, some of these exchange stocks and depositories have seen a very good run, but off late, most of them have come under some bit of selling pressure. So on the charts, how are you viewing CDSL now? More upside going forward?
CDSL can be viewed from both short and long-term perspective. It has seen a very steep and strong uptrend. The moment it went above 1400, there was a strong breakout. And from 1900 levels until the current levels, 1719, it has seen some corrective retracement. So ideally, if you are a short-term investor in this, perhaps it's time to book some profits and take some money off the table from CDSL. And if you are holding it for a medium-term horizon, you can trail your stop loss to around 1670 rupees and take money completely off the table if the stock slips below 1670. But otherwise, if you are a medium to long-term investor, one can certainly continue to stay invested. For short-term traders and investors, they can take some money off the table.
All right, that's the view on CDSL. But let's talk about the stock of the day very quickly before we move on to queries that are trickling in this morning. Interglobe Aviation, this stock is expected to face some rough weather in today's session, given the fact that it is facing a mammoth tax demand of 1600 crore rupees. Of course, if you look at the stock, it has had a fairly okayish run over the last 1 month or so, but there have been concerns building around the Pratt & Whitney engines as well, and now there's this tax demand. So, would you expect the stock to head lower to somewhere around 2500 or 2400 levels now? Given the fact that, it hasn't really been able to take off too much on the charts as well.
I would not say it has not been able to take too much on the charts, because it's in a sideways consolidation, and the consolidation looks quite healthy on the charts. The Indigo, on a closing basis, it has got a very strong support between 2500 and 2550. So, in event of any knee-jerk reactions to any news flow, we can expect 2500 to 2550 acting as a good support on closing basis. On the upper side, we will see strong momentum returning to the stock if it is able to move about 2650. Until that happens, expect the stock to stay in a range.
All right, expect the stock to stay in a range. But then on that note, let's take a look at some of the queries that are trickling in. The first one, of course, is coming in from Funny PG. Wants to know your thoughts on Coal India. He bought shares at the rate of 351 rupees 34 paise. And he wants to know what he should be doing. Of course, the stock has been consolidating. If you look at the monthly charts, in fact, no, over the last 5 days, it has, consolidated and lost somewhere around 6% or thereabouts. But, on a monthly basis, it is giving a good 9% returns or thereabouts. He is making some bit of a loss here. Would you advise him to average, or would you say hold on and, there could be some bit of an uptick going forward?
There will be two things again. I would not advise him to add more to the stock, because the stock has temporarily made a top somewhere around 355, 356 levels. The level at the very level at which the viewer bought the stock. So there are two things. I would not advise him to add more, but I would advise him to hold on to the stock and maintain a stop loss levels of around 320. Any slippage below 320, I'm sorry, but you will have to move out of the stock for the time being and wait for some opportune time for re-entry in the stock. But buying more is something I would just not advise.
All right, hope that answers your query. The next one is coming in from Vijay, and he wants to know your thoughts on a Gokul Das Exports. The stock has doubled. If you look at the 6-month charts, on a 6-month basis, it has of course doubled. But it has been on an upward trajectory ever since NR Narayanamurthy backed company has bought a stake in the stock, right? So going forward, if somebody is holding on to it, would you advise them to book profits, or would you say keep holding on, because the stock is already a multi-bagger stock and perhaps going forward it could give better returns?
I would advise him to continue to stay invested in the stock. The stock can move towards its previous high point of around 980. We need to see how it behaves around 980 levels. Perhaps there can be some range bound consolidation, but it remains in a primary strong uptrend. So I would suggest him to stay invested in the stock and trail his stop losses in a way that he is able to protect at least 75% of the residual profits. So stay invested and trail your stop losses higher.
All right. Hope that answers your query. He has advised you to hang on in the stock. The next query is coming in from Baswaraj, and he wants to know your thoughts on HDFC AMC for the long term. This stock, I think, has been sideways over the last month or thereabouts, but on a 6-month basis, a good 60% return coming in. Do you think the stock will consolidate further going forward?
Stock will consolidate going further, but since this is being viewed from a long-term horizon, one can certainly stay invested. The uptrend stays intact, and I expect over the coming months to the stock to go on and test the levels of 3200, 3250. So one can very patiently stay invested in HDFC AMC.
All right, that's the view then. But let's try and squeeze in some more queries then. Naga Teja wants to understand your views on NTPC as well as NMDC. NMDC just, it had reported its numbers and it was pretty good. On the charts now, how would you view the stock?
Let me begin with NTPC. I am expecting a further surge in NTPC because it's trying to take out a double top resistance on the daily charts, which was at around 252 levels. The stock has closed a notch above that point. So I expect this uptrend to continue. The immediate levels that we expect on NTPC is 260 to 264 levels. So NTPC, I have, one can continue to hold if they are already having the stock in their portfolio, or one can even make a fresh entry in the stock with a short to medium term time horizon and expect 7 to 8% move in the stock over the coming weeks. NMDC was the other stock, I believe.
NMDC was the other one, right?
Yeah, and NMDC also continues to remain in an uptrend. I don't know what the situation of the person is with the stock. I mean, whether he's holding the stock in his portfolio, I would suggest him to continue to stay invested and put 165 levels as a trailing stop loss. But if he is buying, if he is intending to make a fresh entry, even then, I would suggest him to maintain a very strict stop loss of 162 on the stock.
All right, that's the view. More upside on both NMDC as well as NTPC. But last query coming in, two people have sent in the query on the same name, Alkyl Amines. Juturu Pawan as well as Raja Sachin want to know your thoughts on this particular stock. Of course, it has been a fairly volatile ride when you look at the charts of an Alkyl Amines, right? But over the last 5 sessions or thereabouts, it has been attempting to make a comeback. Would you see more upside going forward, or do you think the stock will remain sideways because it is very close to its 52-week lows?
A mere fact that it is at its 52-week lows is not a reason enough to buy any stock. And speaking specifically of alkyl amines, it is near its 52-week lows. It is trying hard to make a base for itself. There is also a mild bullish divergence of RSI, which is seen on the charts, but there is no sign that would confirm that potential bottom might be in place. So I would suggest anyone who is intending to make a fresh entry to avoid this stock, because it basically remains in a technical, in a secular downtrend. There might be a technical rebound, I'm not denying that, but that will not change the trend unless it is above certain levels. So alkyl amines is best avoided.
All right, best avoided. That's the call on alkyl amines. Hope that answers your query. But with that, we've come to the end of this query segment. But before I let you go, Milan, what are you, flagging off for viewers this morning in terms of stock recommendations?
I have 2 stock recommendations, but I'll add a sentence to it. I know we are running out of time, but I would suggest viewers to keep an eye on the metal stocks. The metal index was sitting on a verge of a multi-month breakout. So from that, I will go back to my two stock recommendations. First is a buy recommendation on Infosys. I suggest entering Infosys above 1460, and while maintaining a stop loss of 1390, one can expect 1515 levels on the stop. The other stock that I suggest is Jubilant Foodworks. One can enter Jubilant Foodwork above 532, and while maintaining a stop loss of 517, one can expect the levels of 555 on the stock.
All right, those were the recommendations coming in from Milan. With that, Milan, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us, as well as answering all of your queries so patiently. Well, for all our viewers, if we couldn't take up your query, don't get disheartened. Keep sending them in and we will try and take them up. But with that, we're completely timed out on this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But stay tuned, because coming up next is Opening Bell.